What is up, traders? Sumi here with Team Basani. Today is April 29th, 2026. It's a Wednesday, and today was a day. The Fed delivered a dramatic 8-4 split decision. There was 4 dissenters for the first time since 1992. 3 Fed presidents want to remove the easing bias. They don't want to cut rates anymore. And Powell just held his last press conference as chairs. And he says he's staying governor on the block to block Trump from controlling the board. He's saying governor to block Trump from controlling the board. So kind of sad. He said that he will not see us again. And it was, I like how structured he is. So it's very sad to see that. But, I just got off the phone with a big CEO for a bank, one of the largest banks in the world, one of the richest people I know. And oil is up. Brent just hit 120 and the markets are still pushing up. 4 mega cap earnings dropped in 80 seconds. Microsoft crushed it. Okay. We're gonna look at all these numbers in a second here. Microsoft crushed it. AI revenue up 123% to a 37 billion rate run. Meta also beat on revenue as well. Meta went down. Okay, we have Google as well, absolutely murdering it, and Amazon also doing well. So these 3 out of 4 are looking really good. Okay, so a lot of stuff happening. Let's break down the Fed's decision first. So Powell's last stand, that's what we'll call it. Okay, 8-4 split decision, first time since 1982. The FOMC voted 8-4 to hold rates at 3.5 to 3.75%. So with that being said, the market was FOMC was around 230. We had a little bit of chop. Market ran down a little bit here, but then it pumped back up. We actually had this huge red candle starting at 2, pump back up all the way up to roughly around 712. So it wasn't as negative. It seemed pretty good. The split was not, the hold was expected. The split was not. Okay. 4 dissenters. The last time FOMC dissented was October 1992, which is 33 years ago. This is a massive signal. The Fed is not unified. And here's who dissented, and here's why. So number 1, we have Stephen Moran, Trump's appointee, sixth straight dissent. He wanted a quarter point cut, the lone dove. Beth Hammack, Cleveland Fed. Neil Kashkari, Minneapolis Fed. And Lori Logan, Dallas Fed. So Hammack, Kashkari, and Logan did support holding rates, but they wanted to remove the easing bias from the statement. So the translation is they're saying that they're going to stop signaling that cuts are coming. They don't want to cut, period. I guess it's basically just them saying, we don't want to be led. We kind of want to, we want to kind of operate independently. So they're not united. And 3 of the Fed members just basically said, stop talking about rate cuts. That's a hawkish bomb. The market is now pricing in no rate cuts for the rest of 2026 and well into 2027. What's funny is that the market is still pushing up. This is the interesting part, okay? And I'm going to circle back to this. Let me circle back. The other thing that we need to talk about is the Middle East, okay? So developments in the Middle East are contributing to a higher level of uncertainty about the economic outlook, which is what Powell said as well. Powell said elevated oil prices will push up overall inflation in the near term. The Fed is essentially saying, we can't cut because this war is causing inflation, and we can't hike because the war might cause a recession. They're trapped. The Fed is stuck. The oil is too high to cut, and the economy is too fragile to hike. So they're watching and waiting. So Powell's last press conference, the thing that he said was he's confirmed that today was his last day as Fed chair. His term ends May 15th, but he announced he will stay on as Fed governor for an indefinite period because he's waiting for the Fed headquarters renovation investigation to conclude. The real reason is because he doesn't want Trump appointing another governor. Warsh will replace Powell as chair, but Powell will keep his governor seat, which means that Trump only has 3 out of 7 governor seats, not the majority. The hawk-dove balance doesn't really change. And I mean, this is a brilliant strategy, in my opinion. It's political chess. He's stepping down as chair, but staying as governor, which means that Warsh can't stack the board, and the Fed stays balanced, which is actually good. The market should actually like this because the hawkish fear about a Warsh-dominated Fed are overblown. So market reaction to the Fed pulled back a little bit. 2-year Treasury yield spiked to 9.3 BPS to 3.937%, the highest in 2 years. 10-year yield is up 5 BPS to 4.41%. Yields are surging. The bond market heard hawkish from 4 dissenters. Gold is dropping a little bit. The market rate is now pricing in 0 cuts for 2026. WTI settled around 108, 107, up 8% of the day, massive spike. The peace premium from last week is completely gone. This is back and forth. The market manipulation is crazy. I'm saying it's market manipulation. I'm saying this aggressively. 2 weeks ago, we were at 83. That's a $36 swing. The market thought the war was ending. It's not ending, and this whole ceasefire thing is not stopping. This is really bad, okay, for the economy. SPY and QQQ are pushed up. They're pushing up, and it's surprising to me. This is pushing up. I mean, we were at 716 for SPY here a while ago. Just, I think, yeah, an overnight session, day before yesterday. And we're going down. We hit 708, and now we're coming back up. And looks like we're high up again. Now, look, we might drop and open up lower. It seems to be the thing. SPY is all over the place right now. I think that it pushed up a lot. A lot of earnings are pushing up the momentum. Earnings just dropped, all 4 in 80 seconds. 80 seconds of big tech earnings are deciding the stock market's fate. You know, they're pushing the market up. Microsoft crushed. AI is working. Revenue is up like crazy. 82.9 billion versus the 81.46 billion expected. Beat up by 18% year over year. EPS is 4.27 versus 4.04 expected. Beat up by 5.7%. Operating income 38.4 billion, up 20%. Net income 31.8 billion, up 23%. Microsoft is absolutely murdering it. Okay, I'm telling you, Microsoft is fire. Microsoft just answered the OpenAI question. The AI revenue is up 123%. Cloud RPO is up 99%. Copilot at 20 million seats. The spending is producing returns. OpenAI's miss was a company problem, not an industry problem. Meta beat on revenue, but had a CapEx bomb. Revenue at 56.31 billion, up 33% year to date. Massive, massive beat. Headline 10.44, but inflated by $8 billion tax benefit. Adjusted EPS closer to 7.31 versus 6.82 consensus. Still a solid beat. Ad impressions up by 19%. Price per ad up 12%. Ad machine is humming. It's moving. It's grooving. And Meta's AI ad business is crushing it. 33% revenue growth. 125 to 145 billion in CapEx is a lot of faith in AI. Mark Zuckerberg pivoted very hard. The market heard spending more and flinched, and tomorrow morning will tell us if the revenue beat is gonna hold in terms of the stock. Okay, so Meta, we got a stock here, massive drop. I think this scared a lot of investors here. Microsoft, push up, push down, back up. I don't know what the fuck's going on here, but Microsoft is looking good. I think Microsoft has a lot of room to grow. Meta, this is scary for investors. Now, let's talk about Amazon, or let's talk about Google first, okay? Looking good. Looking good, Google. Last quarter, Google Cloud grew 48%, fastest in 3 years. Search grew up 17%. Polymarket had a 98.5% probability to beat the highest in the 4, which I was actually not so confident in, but it did beat. Google held over 40% growth. The AI CapEx thesis is confirmed across the entire hyperscaler stack. Amazon, I think Amazon was my strongest bet. Amazon looking really good. We traded Amazon today. We got a little bit of a push on Amazon. AWS expected to be 36.7 billion, up 25% year to year, the fastest growth in 13 quarters if it held. 2026 CapEx guided near 200 billion, which is the biggest spender of the 4. They were talking about this. It's very scary for a lot of investors. RPOs were 244 billion last quarter, and the growth here signals future revenue visibility. Results are good for Amazon. Amazon accounts for 200 billion of the 650 billion in total hyperscaler CapEx. If AWS growth is accelerating, that spending is justified. If it's decelerating, the market has a problem. So Microsoft clear beat, AI revenue up 123%. OpenAI scare was overblown. Meta revenue beat, but the CapEx spooked a lot of investors. The ad revenue is incredible. Spending is scary. Google and Amazon, really good. Results are landing right now. We're going to check the result, the Discord for full real-time breakdowns. Things are looking good. My big watch is for tomorrow. Microsoft, Google, Meta, Amazon. I want to see how they perform in the day. I want to see how people are trading them. I want to see how people are moving. Thursday morning, we have a lot of information coming out. We have GDP advance estimate at 8:30. If GDP is negative, recession fears spike. If strong, the resilient economy still holds. The resilient economy is what Powell was kind of speaking about today. Thursday morning, we have March PCE inflation and employment cost index, trifecta of economic data coming in. Thursday after close, we have Apple's earnings and Tim Cook's farewell as CEO, kind of like Powell. We're saying goodbye to a lot of people. Brent at 119.50 cents a day. If it holds over 115 into Thursday, the inflation narrative is going to dominate regardless of what the Fed says. And yeah, markets are looking crazy right now. I think the markets are too high right now. I did hit SPY calls because it's pumping up because the tech is defensive. Tech is defensive. Look at this stuff right here. Like tech is holding the market up. These are pushed up so much. These are up a lot, guys. These are massively up. You know, just a while ago, we were looking at NVIDIA. NVIDIA was trading at like 164. Google was trading at 271. Amazon was trading at under 200. Tesla was trading at 337. Microsoft was super low, 356. Meta at 520. And Apple, obviously Apple held a little bit more, 243. Apple's more of a hardware company now. But all this was, you know, just SPY was low. And now it's pumping up, and it's because of this AI spending. It's because of the fascination with AI, and it's because of tech. So we're going to stay tuned tomorrow. We're going to look at what happens. Tomorrow's going to be a very interesting day for all my traders out there. This is something that you guys have to be looking at. I'm going to be watching a lot of the big four that had earnings today. So stay tuned. Jump in the Discord. If you haven't jumped in yet, link down below. Would love to trade with you. And like always, we'll see you guys on the charts. Keep it green. Sumi out.